Thanks for joining me today at InvestorIdeas.com, Cleantech and Climate Change podcast, looking at today's problems and solutions for the future. I'm your host, Dawn Van Zandt, founder of InvestorIdeas.com, and hoping to share our way of making a difference in climate change. Thank you for joining me today on the Cleantech and Climate Change podcast. Today I'm talking to Jean-Pierre Colin, Executive Vice President and Director of Dynacert Inc., traded on the TSX, DYA, and on the OTC, DYFSF, and a member of Canada Cleantech Alliance. $20 billion has been raised in flow-through shares since 1984 when it first started for mining and oil and gas, and Jean-Pierre thinks now it's time for cleantech. He shares his passion as an advocate for advancing cleantech flow-through shares and how it will create a new green economy for Canada and an exciting opportunity for investors in the sector. So for our listeners, can you give us some background leading up to your current roles in cleantech, including Executive Vice President and Director of Dynacert and a member of Canada Cleantech Alliance?
Well, thank you, Dawn. By way of background, I was an investment banker for 30 years and I managed corporate finance departments. And now I'm a corporate strategist serving on boards of public companies, including cleantech companies. When I started in the 80s, I have a legal background and I studied tax law, and I did the very first flow-through share deals in Canada when the federal government instituted flow-through share tax legislation in the early 80s. And they were extremely successful financings and successful companies. So I then created flow-through share funds, in fact, raised over $736 million in the NIM funds of the 80s, 9 limited partnerships, which invested in 400 different mining companies in Canada. And we basically, at the time, built from what was a fledgling junior mining industry to a full, well-financed, well-capitalized industry, which eventually became so robust that I would venture to say that today Canada is an international hub of junior mining. And I thank flow-through shares for that, because in very large part it was because of the boost to the economy that flow-through shares created. And I think, and I really believe, that the same thing can happen for cleantech in Canada. Canada can become an international global hub of clean technology if we get the help that flow-through shares can create, which is why I'm involved in promoting flow-through shares with the government of Canada and with the provinces. And can you talk about to investors that, a lot of cleantech investors are very different than mining investors, so they may not be familiar with this mechanism. Can you explain to them how it works and how it benefits both them as an investor and the companies that they're contributing to? Yes, that's a very good point, Don. The investors in mining and oil and gas are used to flow-through shares. In cleantech, they may not be. So what flow-through shares does is it provides a tax deduction against income for Canadians who buy a flow-through share. And if the money is used for qualifying expenditures, in the case of mining and oil and gas, it's exploration and development. In the case of cleantech, what we are proposing is that it applies not just to R&D expenditures, but also to commercialization of Canadian products that can be sold globally. So to be a bit more specific, a Canadian company involved in cleantech would issue shares, raise money by selling shares to investors, and utilizing those funds in either R&D or commercialization of Canadian products in cleantech, and the investors would receive a tax deduction and usually it's 100% of the investment. So if an investor pays $1, it costs them after tax 50 cents if they're in a 50% tax bracket. So it's like buying shares at a 50% discount. What's also happened in mining throughout Canada since the 1980s is the governments of Canada and the provinces, in order to attract funds to their province, they have created a tax credit. So when an investor buys a flow-through shares, not only do they get a deduction against their income for the value of that flow-through share that they paid for, but they also get 10 or 15% tax credit, meaning it's almost like a holiday of tax for up to 10 or 15%, depending on the province. So that could work very well for Cleantech. And again, there's, as you allude to, Don, there's also that it's got to be clear that it's a new group of investors that would probably need to be taught all about the advantages of flow-through shares so they can perceive the opportunity. And just to understand the significance of all this, there's been $20 billion raised in flow-through shares in Canada. Some years there were $1 to $2 to even $3 billion of flow-through shares. So we're not talking about just a little bit of money here. We're talking about a significant investment.
And do you have any projections and goals laid out for the cleantech sector, looking at comparables? Whenever you're looking at a business plan, you're looking at, well, what can this do for us? Do you have anything in mind, or has the Alliance put anything together, what they're looking out for the next 5 to 10 years if this goes through?
Okay, well, as you mentioned earlier, I am Executive Vice President and Director of Dynacert, which is now listed on the Toronto Stock Exchange, symbol DYA. We at Dynacert have been able to raise $60 million the traditional way without availing ourselves of any flow-through shares. We have the expertise to raise money, and we have a very good product, so we were blessed to be able to do that. However, a lot of clean tech companies in Canada either don't have the expertise of raising money, nor do they they're perceived as being very, very risky to investors. So what Flow-Through Share does is de-risk that. So what we call this de-risk, the extent of the de-risking process, the nomenclature we use in the Flow-Through Share business is called ring fencing. So let me give you an example. If you allow every single expenditure of every single clean tech company to be eligible for a tax deduction, that would cost the government, provincial and federal governments of Canada, a lot of money. There would be a drain in the tax system. We call that the floodgates. So when you're developing a new system of flow-through shares for a new industry such as clean tech, you start by saying what kind of expenditures, which companies will be eligible at first for this deduction. And then as this goes on, year after year, the government can expand the application. So we are starting with our recommendation to the federal government has been, let's start with clean tech companies dealing in cleaner air, cleaner atmosphere, because that dovetails very well with the federal government's stated intentions of cleaning up the air. So what does that mean? It means extending flow-through shares to companies that are involved in power generation, or companies that have products that clean exhaust fuels like Dynacert, or products that reduce carbon emissions, NOx emissions, companies that can create a better, healthy breathing air. And by the way, which we've seen under COVID with the industry slowdown, people are now very sensitive to cleaner air because they can see the effects of cleaner air right around the world.
Absolutely.
So our aim is to start with companies that are dealing with cleaner air carbon emissions. At least that's our recommendation. It's a political decision and a strategic decision for the governments to decide how they apply flow-through shares. Now, just to be fair to the federal government, there is a flow-through share, a partial flow-through share deduction already existing in clean tech for solar power and for solar panels. So wind power and solar power from solar cells. It is right in the Tax Act. It defines such a certain of expenditures in those industries as being eligible for flow-through shares, but almost nobody's heard of them. And
I was going to ask, has anybody capitalized on that? Has anybody actually, taken that advantage that you're aware of? Or?
Yes, there are a few smaller groups that have, on an ad hoc basis, in small deals, certainly not in the billions, certainly not in the hundreds of millions, but in the fives and tens of millions of dollars, have taken advantage of this. But I would venture to say that the larger companies that have taken advantage of this would have spent that money anyways on those expenditures, whether or not there had been a flow-through share tax deduction. So it didn't create new jobs, to my knowledge. It didn't create new technology, new know-how. It's really used and we haven't seen anything public either. We haven't seen those tax deductions used in the public markets. So that's an example of ring fencing that's so tight, so small. The definition is so narrow that almost nobody ever heard about it. So what we want to do is build that and make it a lot wider.
And can you talk about the Canada Cleantech Alliance and maybe a couple of examples of technology that really showcase what Canada is doing in the space right now?
So the Canada Cleantech Alliance, I'm not a spokesman for the Alliance, but Dynasur is a member of the Alliance. And the Alliance has seconded me to be a spokesman with bureaucrats and politicians in Ottawa at the federal level. So I have, under the guidance or under the hosting of the Canada Cleantech Alliance, I've been personally involved with them in some way. They are a nonprofit organization that represents clean tech funds, investor groups, the Toronto Venture Exchange, some brokerage houses across the country, basically a lot of people who have an interest in clean technology, large and small companies, of which Dynasur is also a part of. And they are very varied in terms of what they do. They're in all sorts of aspects of clean tech, whether it be air pollution, water pollution, power generation. So these companies are all fostering. They see the what's happened in mining and oil and gas, and for the last 6 months, the Canada Cleantech Association has made a big push in fostering flow-through shares. And that's one of their largest lobbying efforts at the present time. They're not restricted to that. They're growing very successfully. But their first mission, they've identified as flow-through shares as being where they can have the most impact on the clean tech industry.
Well, timing is everything when you're looking at getting something accomplished, and just looking at the sector, and seeing some of the winners in the last 6 months, even through COVID. You look at Tesla, you look at Ballard, which was a top performer on the TSX last year. It looks like it's going to be again this year. And you've got a whole new generation of investors that are very, very motivated to get behind clean energy, clean tech, and anything that is really positive. They're very much a generation of people that invest in what they believe in, not even just to make money. They really want to make a difference. So you've got a large group of investors ready to jump on board, I think, once they get educated on how this really works and the wins for them. So one of my questions is to our listeners, how can they help become advocates to get this done?
One of the ways is, number one, to get informed about what is flow-through shares. And by the way, the Government of Canada, this is an official government-sponsored tax shelter, so the Government of Canada websites have a lot of information on flow-through shares. Understanding what they do and who they're applicable to right now, how investors can take advantage of these great tax deductions that exist in different industries. And the second thing is, once they understand what it can do, then understand the impact of what flow-through shares could do. So I'll give you an example. In mining, flow-through shares have created jobs in northern Canada and actually fueled the economy of many northern Canadian communities. Well, flow-through shares in Cleantech can create jobs everywhere in Canada, not just in northern regions, and create a lot of jobs. Flow-through shares can support both urban and regional economies. And they can help also develop and foster exportable finished products from Canada. In mining, we export mainly primary materials like metals. In Cleantech, we have the ability in Canada with all our Cleantech companies and the ones that would grow out of a flow-through share program, we have the ability to create new innovative products that can be exported globally. And these will be finished products which create a lot of clean jobs and clean know-how. And I think when you start having the hub or the nucleus of a group that can develop a Canadian industry in Cleantech, it feeds on itself. The more we have expertise, the more we have successful products, the more and more people see that as examples and learn from that and go off and create more of these. And eventually, if the analogy with mining is the same, all of a sudden you have a global hub, people from all over the world coming to Canada and learning more about our products and wanting to establish themselves in Canada to take advantage of this financing mechanism. So to answer your question a bit more directly, what can all these companies interested in Cleantech really do? I think is understanding the advantages of a flow-through share program in Canada for Cleantech is very important, and fostering that. One of the ways to foster that is to join the Canada Cleantech Alliance. It's a voluntary organization where many companies are good enough to donate funds, but also donating expertise. The other big push is recognizing that without the help, without some stimulus program coming from somewhere, and typically we look to the government for that kind of stimulus, this won't happen on its own. Funding of Cleantech companies is risky. Investors often shy away from risky investments. So in order to expand the audience of investors in the public markets and in private markets, like venture capital funds as well, in order to expand that population of potential investors, that universe of investors, we need to give those investors a way to reduce their risk. We can't always ask the government for a loan or a grant. That could cost an infinite amount of money to the government. What's beautiful about flow-through shares is the money comes from the capital markets. The government gives a tax deduction, and the capital markets provide the money, the analysis of where to invest. You don't need anybody in Ottawa deciding where the money goes. You have lots of professionals in the Canadian finance industry that follow Cleantech, that know which companies are good investments, and flow-through will de-risk those investments to the point that, again, the analogy with mining is the same, de-risk it to the point that it makes it impossible to resist to invest in Canadian Cleantech.
Well, one of the analogies, I think, looking at mining investors for years, they're very loyal. They go through the ups and downs. They know the company. And I think like I said, I think you've got a whole new generation of investors that will have that same mindset and apply it to Cleantech. They will get behind the technology, and I think they will support it the same way mining investors. So I think if they're given this opportunity, I think that they will definitely jump on board. My one question is, if the federal government doesn't adopt this in this next budget, what's the next step? Like, what's the next time frame? Do you have to wait for the next budget next year, or is there anything you can do in the interim? Or
it's a good question, Dawn. You mentioned something very important at the beginning of this question, is the people today who invest in Cleantech. Just want to underline, that's a very important point you bring up. The millennials are very conscious about clean air, clean water, they're very conscious about pollution, the young investors today. But also, so are the well-established older people in Canada, not just because we have a younger generation behind us, but because there is a social responsibility to be clean. And so there's a big willingness amongst investors to invest in clean tech, to do something about the problems of pollution that we hear about all the time and we see on television, and the smoke and the pollution that we're exposed to all the time in the media. So there's a willingness across many sectors of investors to want to do something, and this is why flow-through makes sense. It can be used by any sector of the investment population. To answer your other question, what would we do if the government does not implement expansion of flow-through shares into clean tech this year or at the next budget? Number one, I think we've got to, through the Canada Clean Tech Alliance and its professionals involved with them, around them, they did a great job in putting us in front of the right people. I believe we spoke to, in many different departments, at many different levels, we spoke to the right people who understood what flow-through shares are for the most part, who understood clean tech and understood the problem, and the opportunity that flow-through shares would provide for the clean tech industry. Again, I always speak about making Canada a hub of clean tech in the world, globally. What would we do if the government did not implement something in this budget? I think is we would continue the dialogue, because I think they are close. I personally also have spoken to various provincial governments who are also very close to wanting to implement a flow-through share program, but the federal government has to lead the charge here. There's a big political constituency that wants to see clean tech expand in Canada. So we're not going to give up. I see no reason why flow-through shares wouldn't work for clean tech, and I see very few disadvantages. It creates jobs. The money that the government, quote unquote, invests in giving a tax deduction to investors in flow-through shares of clean tech, that money comes back to the government in the form of tax revenue, because those funds are geared to providing jobs and providing that money that is invested by clean tech companies as flow-through share funds goes right back into the economy immediately, almost immediately. So it doesn't cost the government that much to implement a flow-through share program. In terms of the treasury of the government. So it's a hypothetical question, but it's an important one to consider. I think what's really going to happen, if I can predict a little bit here, imagine a little bit what will happen, is the prudent thing for the government to do is to start a limited flow-through share program for clean tech to see how well it works, see how much it costs, see how it benefits Canada. And then over the years, we'll expand the application of that program for different types of clean tech companies and different kinds of expenditures. So I think we can't expect a whole new program that will be all-encompassing day one, but I think we could expect the prudent approach that I think any normal government would take is baby steps. Start with baby steps. And by the way, that's what happened in mining and oil and gas. Since 1984, when flow-through shares were first invented, the application of flow-through shares has expanded continually to different types of expenditures in those industries, and to apply to also have rules that are more understandable. The worst thing that can happen is when the governments implement a new program and nobody understands what the rules mean. I think the granularity, the ability to be specific about a potential flow-through share program is important. I can give you examples of that.
Sure.
Well, I've identified eight elements of flow-through shares that require attention and expertise, and I'll just rattle them off. A program needs guidance and directions. It needs risk-taking and change. It means changing the financial system or the way that the finance works. So we have to expect it's going to change things. It requires people with experience in flow-through shares to design a flow-through share program. Experience is important. We'll also have to be persistent. It takes time to convince people and to demonstrate and understand and dialogue. So we need to have the will, the persistence to do this. We need a complete program. And when I say completeness, I mean, if you build half a bridge, the bridge doesn't go anywhere. You have to have a program that's comprehensive. You have to also pay attention to the details. It's easy to talk about this in generalities, but behind the podcast and behind the articles are people working very hard at hammering out the details of how this flow-through share program would work. It also takes creativity and imagination, not necessarily looking at what does work, but also looking at what doesn't work. And that means what ifs. That means asking ourselves tough questions that a lot of people don't always want to listen to. It will also take compromise and negotiation. We won't all get what we want day one. We'll have to learn to compromise as a financial community with governments who are also compromising. And it takes caution. We don't want to make this we don't want the first Cleantech flow-through share program to be a disaster or a bust. We have to be very careful that it works well for all the parties involved. So those are my criteria when I talk about this. And then again, the devil's in the detail.
Well, you seem very committed and passionate. So, just in a summary, what is your personal motivation driving you to get this done? You seem very behind this venture. So there's something personal that usually does that.
Well, thank you for asking, Don. I'm on the board of Dynacert, and Dynacert will probably not require any money in the short term to raise money from the public in the short term. So a lot of people are asking me, what are you doing there, JP? And the answer is I was involved at the very beginning of flow-through shares in the early 80s, and I saw the huge growth and impact that flow-through shares had on oil and gas, and especially in mining. I saw how that created jobs and industry, expertise, and made Canada, if we look at PDAC today, the Prospectors and Developers Association convention today, 60,000 people flock to Toronto every year. We have the expertise right across Canada in terms of mining finance. And that happened in large part because of flow-through shares. So what motivates me to foster Cleantech flow-through shares is I see we're at the beginning of a whole new industry for Canada, and it's a way to give back. It's a way to say, I know a lot about flow-through shares, and I want to pass it on to Cleantech, because the importance of the future, a great importance of Canada in the future will be our Cleantech industry.
Well, that's fantastic. And based on the numbers you raised in the other sectors, it sounds like you'll be able to accomplish a lot here as well. So thank you very much for joining us today. And I would definitely like to do a follow-up as you get some feedback and where this is all going to be directed, and hopefully successfully.
Well, thank you very much, Don. It's a wonderful opportunity, and I hope your audience supports flow-through shares and Cleantech.
For disclosure purposes, Dynacert is a paid monthly featured Cleantech stock on InvestorIdeas.com. You can learn more about that at our disclosure pages found easily on our bottom template. To hear more Cleantech podcasts, visit the Cleantech and Climate Change page on Investor Ideas. You can find it on our top template. Also, Investor Ideas has a lineup of other podcasts and themes, including the AII, the Crypto Corner, our cannabis podcast called Cannabis News and Stocks on the Move, rated one of the top investor podcasts in the sector, Play by Play, a podcast looking at sports and esports news, and Exploring Mining. To listen to any of our podcasts, visit our podcast page on Investor Ideas at investorideas.com/audio. And a reminder, you can hear our podcasts on Spotify, iTunes, TuneIn, Stitcher, Spreaker.com, iHeartRadio, Google Play Music, and most audio platforms available to you. If you like any of our podcasts, we would appreciate you recommending them or reviewing them on your audio platform. And to help you follow and track clean tech and renewable energy stocks, Investor Ideas has created a directory of publicly traded stocks in the sector. You can find that by going to our homepage, looking on the sidebar and looking at renewable energy and environmental themes, and you'll find our stock directories there. Investor Ideas does remind all of investors to read our disclaimers and disclosures on our site. You can find them at investorideas.com/about-disclaimer.asp. It is important to read these. And this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investment involves risk and a possible loss of investment. Thank you again and have a great day.